Imagine a world where you could buy shares of Apple, Tesla, or even US Treasury bonds, not through a broker, but as digital tokens stored safely in your wallet. This isn't science fiction anymore. Nasdaq, one of the biggest stock exchanges in the world, is making a bold move. They're pushing to launch tokenized securities trading. But what does that actually mean? How does it affect Wall Street, regular investors in the US, and the future of trading? That's what we'll break down in today's video. What are tokenized securities? Let's start with the basics. A security is simply a financial asset like a stock, bond, or ETF. Tokenization means converting that security into a digital token that lives on a blockchain. Think of it like this. Right now, when you buy a share of Microsoft, your broker updates their digital ledger. In tokenized form, that share becomes a digital token, stored transparently on a blockchain. It's still the same share, but the record-keeping, settlement, and ownership transfer happen instantly on-chain. Why is Nasdaq doing this? There are a few big reasons. Efficiency. Traditional stock settlement takes 2 business days. Tokenized trading could happen in seconds. 2. 24/7 access. Wall Street runs on weekdays, 9:30 to 4 p.m. ETI. Tokens could trade around the clock, just like crypto. 3. Lower costs. Fewer intermediaries means cheaper transactions. 4. Global reach. Investors worldwide could access US securities without going through multiple brokers. In short, Nasdaq wants to bring Wall Street into the blockchain era. What could be Nasdaq isn't just thinking about stocks. Here's what could eventually move on to blockchain. Public company shares like Apple, Amazon, Tesla, ETFs that track the S&P 500 or Nasdaq 100, corporate bonds and even US Treasuries, private equity and real estate, which are currently hard for everyday investors to access. Imagine owning a fraction of a Manhattan skyscraper or a private tech startup, all through tokenized assets. The tech behind it. So how does it work? Nasdaq would issue tokenized securities on a regulated blockchain network. Each token is fully backed by the underlying asset. Smart contracts handle ownership transfers automatically, reducing human error. Investors hold tokens in digital wallets, either provided by their broker or directly by the exchange. This is different from crypto coins like Bitcoin. These tokens are fully regulated securities, just with a new digital wrapper. Benefits for US investors. For Americans, here's why this could be huge. Faster settlement means you get your money or your shares almost instantly. More liquidity. Fractional ownership allows smaller investors to buy into big companies. 24/7 trading. Imagine trading Tesla on a Sunday night. More transparency. Blockchain records are tamper-proof and publicly verifiable. Today, if you sell $1,000 worth of stock, it may take 2 days to settle. With tokenized trading, you could have that cash in your account in minutes. Challenges and risks. Of course, there are challenges. Regulation. The SEC needs to fully approve this shift. Technology adoption, brokers, banks, and investors must adapt. Cybersecurity. Tokenized assets must be protected from hacks. Volatility and adoption. It may take years before tokenized assets are as common as traditional stocks. So while the benefits are clear, the road ahead isn't simple. The bigger picture. Nasdaq isn't alone. Big players like Citi, Bank of America, and BlackRock are already experimenting with tokenization. Experts believe by 2030, trillions of dollars in assets, stocks, bonds, real estate, could be for Wall Street. This could be the biggest change since electronic trading in the 1970s. For Main Street investors, it means easier access, faster trades, and more opportunities. So what does Nasdaq's push really mean? It means the line between traditional finance and blockchain is blurring. The future stock market might not look like today's Wall Street at all. It could look more like crypto. Now, I want to hear from you. Would you trust trading tokenized stocks on a blockchain? Or do you think Wall Street should stick to the old system? Drop your answer in the comments. And if you found this video helpful, hit that like button, subscribe, and ring the bell icon. I'll be covering more big moves in finance and crypto that could shape the next decade. See you in the next one.